All right, good afternoon, everyone. A couple of years ago, I created my own investment fund in Luxembourg focused on digital assets. And let me tell you, it was a total mess. This is what it looks like. So the money had to flow from our investors' bank account to our fund bank account, then to our exchange bank account where we could buy our assets, but then to extract the fees from our fund or to exit those investors, well, we had to go through all those intermediaries back again. So many intermediaries. Those are costly, those are time consuming, but not only, because back in November last year, we learned firsthand what counterparty risk is. Basically, we woke up one day and all our money, FTX, was gone. So we want to change the system and go to a model like this. We expect to do much better, a model where the money flows directly from the investor to the fund. That's it, no intermediaries. And basically all the administration, so subscription, redemption, NAV calculation, fees extraction is automatically computed on chain. And this is what blockchain is for, is to remove intermediaries and bring transparency. So this is exactly what we're building at Fume. We simplify and automate the fund administration with smart contracts. It's a tool for fund managers so that they can invest in any asset class, not just crypto, operate a fully compliant investment funds without intermediaries, while providing selective transparency to the investors and the financial regulators. Our business model is pretty straightforward. It's SaaS. We get a 5% commission on the fund's fees, leaving 95% to the fund manager. It's a pay-as-you-earn model. How does it work under the hood? Well, we have three modular components. One is the on-chain registrar and transfer agents. Basically, the investor subscribes by sending some capital to a smart contracts that issues a tokenized version of the fund shares, some ERC20 token. Then the fund manager can connect a custody solution to the platform, such as self-custody like Gnosis Safe, MetaMask, and so on, or an exchange or any other regulated custodian, such as a bank. And then finally, we have the third component, which is the on-chain administration, basically computing the value of the assets into an investment funds directly on chain, computing and keeping track of all the fees extracted by the investment fund. So we are on a mission to create this new generation of investment funds without intermediaries. Why we're doing this now? Well, there is more and more regulatory clarity around digital assets, but in particular, right now, we want to seize the opportunity that we found out with the PwC. In a recent report, they state that 23% of crypto hedge funds plan to tokenize their fund units. So about our market, of course, this is applicable to all collective investment schemes, but we want to focus on the alternative investment funds, starting with a 10% of European alternative investment funds, but we're going to focus at the beginning with digital asset funds, so crypto hedge funds, because we believe that they will be the most familiar with this technology. About our team. Well, I have both a technical and financial background. I started computer science engineer, but I have multiple entrepreneurial experiences, other startups in the past for tokenization of physical activity, but most recently, this crypto hedge fund in Luxembourg. So the pain that I experienced for the past couple of years in the industry is what led me to the creation of Fume. Whereas for my co-founder, Mark, he, of course, has a technical background, CTO, computer science engineer, but more focused on blockchain technologies. He worked for several years as a developer and as an IT consultant in Switzerland. Then for everything that is legal and compliance related, we have Rafael. By the way, Rafael and Pablo Pfister are also the director and co-owner of the hedge fund that I started before. So they also have the experience in the fund industry. So everything that is legal related comes from Rafael. He studied law and is currently working also in his own family office. Whereas we have Pablo for everything tech related and for the recruiting of the team. About our supporters, well, we are supported by InnoSwiss, so governmental institution. That's how we got started. We got a grant by Blockchain Nation Switzerland. Then we also got an investment and participated to Tenity, a fintech incubator in Switzerland and also in Singapore. About our roadmap, yeah, as I said, we started a few months ago, end of last year. During the first quarter, we participated to this program and incorporated the company, while we were also developing our MVP that is now ready in summer this year. So we're now deploying and testing our solution with Cryptoro Capital, with this investment fund in Luxembourg, and we plan to release a beta and public version by the end of this year. About our round, quickly, we are raising 650,000 Swiss francs. Out of this, for our pre-seed round, 70% is already committed, so we have 30% more or less still available. So yeah, that was it. So we believe in a financial system without intermediaries. Join us. I'm here for your questions.
Thanks very much, Rick. We'll move on to the question and answer segment now.
Sure.
Great. Thanks a lot.
Andreas.
Very cool to see. You mentioned that there are top-notch jurisdictions. Could you tell me which do you think these are, and if there's any jurisdictions that you might need to exclude for regulatory reasons?
Yeah, so we are going to start with Switzerland and Luxembourg. So 2 reasons. Well, one, for the team is all Swiss, so that's where we are based, and we also have investors in Switzerland. We are familiar with the jurisdiction here. But Luxembourg. So Luxembourg is the main center of investment funds in Europe. That's where the majority is. And that's also where we are most familiar with our previous investment funds. So we are very familiar with the jurisdiction and so on. That's how we're going to get started. Then, of course, we're going to expand it to other countries. In Europe, well, you can pretty much have since like if you deploy an investment fund in Luxembourg, then you can replicate pretty much the same thing in whole Europe. So it's not going to be a big deal. Outside of that, well, of course, jurisdiction that we're going to leave on the side, probably the US, it's going to come later on. But when you're talking about investment funds, you want to watch more around Cayman Islands and so on. So probably Caymans to get the US market, Luxembourg for the European market, and then we're going to look into Hong Kong for everything that is Asia related.
Mm-hmm. Brilliant, thank you. What I've seen and encountered is that a lot of investors are curious, but some of the bigger funds have like issues with compliance. For example, they're not allowed to have their own wallet. Is there a way to commit fiat and not have to hold any crypto or yourself?
Yes, indeed. So the idea is to have multiple options depending on the fund regulation. So let me just go back to this image so you see. So in case of a crypto hedge fund in Luxembourg like ours, we are allowed to do a self-custody. We just connect a ledger, MetaMask, whatever we want to. Of course, we have to put in place some risk security measures, but we are allowed to do it. For other investment funds, maybe if you have a UCITS fund trading, I don't know, normal stocks, well, you're not allowed to either receive subscription or operate with tokenized assets. Well, then you have to connect a regulated custodian. In that case, could be UBS. So it would be a fund launched with UBS, and UBS is still your custodian. So that would be the option. So this really depends on the institution. Could also be that a hedge fund wants to trade some other stocks or other instruments, and you still need to have a regulated custodian. So it's always possible to integrate them.
Okay, great. And are there any particular risk with on-chain custody as opposed to the traditional one? I mean, I understand that the regular Web2 approach has the risk, but what are the biggest risks with the on-chain custody?
Well, of course, you need to have a proper key management. If you have an off-chain ledger, you simply rely on a larger institution. You can, so the risk is mitigated. When you have to hold on-chain assets, well, you have also to pay for that, because in order to use this kind of services like Fireblocks and so on, well, they're not free. So you can do things properly, but you can probably do that after a certain scale. So difficult for smaller funds. But yeah, that's part of the operation. The idea is to have a system where you start with 0 intermediaries. So the model is you receive subscription on chain, you have the assets on chain, you keep a 24/7 proof of reserves. What if you want to receive a subscription that doesn't arrive on chain because it's a fiat subscription? Well, then for that subscription, you reintroduce the intermediary, but not for all the other ones. You still keep the default most efficient way for all the rest. What if I want to trade a stocks? Well, it's a stock, Tesla stock, that is not tokenized. Well, you have to connect an exchange that is off-chain. So yeah, this is the balance. The idea is that you start with the most optimal and then reintroduce it only where it's needed.
Very interesting. Thank you.